Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is overnight market prep for Sunday, June 8th, getting ready for the week starting on tomorrow, Monday, June 9th. Going to be going over the usual tickers for overnight market prep. And then I do have on the list Marathon Digital, ticker symbol MARA, Tesla, TSLA. GameStop, GME, as well as Plug Power, ticker symbol PLUG. Then I will open up the chat. You guys can chat amongst yourselves for the time being, but I cannot see it just because I want to focus on getting through these tickers. And then I will have a hard stop on the hour at 11 p.m. Eastern, so an hour from now, because I got work tomorrow. Got to get, a couple more things done before turning in tonight. But since this is Sunday and it's been kind of an exciting weekend, hopefully for you guys, exciting in a good way, I was just thinking of segueing that into mentioning, the Trump and Elon feud and everything going on in LA right now. So it does seem like it could be a pretty volatile week to start, but at the same time, maybe all of that stuff is getting handled. So maybe it's already priced in and, it's not going to be that bad. Hopefully things start to de-escalate on all fronts, but we will have to see. And since it is Sunday, I was going to say, cheers to you guys, whether it's the beginning of the work week tomorrow, or if you're working the weekend and you got a break tomorrow. If you're maybe in the restaurant industry, Monday the shop is closed. So whatever it is, cheers to you guys, cheers to the week ahead, and cheers to the weekend and being away from work. Here you go. Cheers, guys. But yeah, let's dive into the ticker. So first, beginning with the UVIX, which is the 2x long VIX futures ETF. On Friday, this was down about 8%, closing at about $26, $25.95, having hit a low on Friday of $25.70, nearly getting to that level, $25. But we are bouncing a little bit in the overnight. It looks like we're up about 0.77%. But really not that bad. Considering everything that's going on, I would have expected this to be a lot higher. So that makes me think that, things are, getting tied up. Things are not as crazy as they might seem. So I think this is good that this is not, if this is a volatility indicator in the market or, just, what's going on in the world. I think it's good that this is not up so much. So, let's see. And I'm going to try to go through these kind of quicker than normal, but I think that I have mentioned this before, the increased volume here, so that does make me think this could be breaking down, maybe heading down towards 20 and then maybe 17. So, while this could be a hedge for, when the volatility does pick up, in the meantime, it might be going down a little bit lower. So good to be keeping that in mind. And just switching over to the 10-minute time frame so we can see, the price action on Friday. I covered it last during the pre-market. Then we did pull back a pretty good amount Friday morning. And I believe maybe that's because, Elon and Trump, things starting to cool off between them. But yeah, like I said, down almost 8% over the course of the day Friday. Flat into the after hours Friday, and then just going up a tiny bit in the overnight trading. So nothing, really too crazy with this. But I do think that if we do go up higher, might be bumping into some resistance. I was going to say resistance. Right. I guess that would be like resistance and support combined. So that's kind of funny. But yeah, some resistance over here around 32. That might be acting as resistance again. And also, being just below this downtrend, that light blue line, which is the top of this parallel channel that the UVIX has been trading in as it's faded over time. But yeah, during that whole time, this spike would have been in the green, notably about 50%, I believe. So this is, a nice hedge to not be too aggressive on and just, wait for pops. But with that being said, let's flip over to the VIX. This is the Market Volatility Index, which is just traded as options, so you can't buy shares of this. And the VIX did close down over 9%. It looks like 9.25%. So this is actually down more than the UVIX, which, like I said, was down under 8%, whereas the VIX down over 9%. Pretty big red candle there, and closing below this trend line that I have drawn there, really just suggesting higher lows. And it does look like we have taken out the low over here, putting in a new low of 1665. And then over here, we did hit a low over here of 1697, closing below that at 1677. I suspect this is probably going to be going lower. We got the pivot lows over here around 1474. And yeah, I have talked about this potentially coming down to $15 or so, where this previously filled gap, the thick blue line there at 1485, we might be testing that during the week, but maybe not. Maybe we do head back up to maybe around 22. Not sure. In all honesty, none of this stuff I'm sure about. Just trying to evaluate possibilities to the downside, upside, all of that, just so we can have an idea. But yeah, I do think that the volatility, whether it's the VIX or the UVIX or the VXX, I do think this looks like some consolidation that could be leading towards a continuation to the downside. And with that being said, with the VIX potentially coming down more, that would make me think that the SPY could be going higher. However, we do have the overnight trading with the UVIX that was up. That means that the SPY is probably down in the overnight trading, and that is what we're seeing here with this red number. But we can see that it did close on Friday up about 1%, 1.03%, closing the day at 599.14. What was the high for the day? It was over $600. I had talked about that, it potentially getting up to around 600, hitting a high of 683, and then maybe we start to see a pullback, maybe it's just a little pullback, maybe just down to like 590, this yellow line here at 589.28, before we continue higher. But this doodle that I have drawn here does seem like it was a pretty good, approximation for the downside, upside, downside, upside to above 600. So pretty cool there. And it does look like, if I just remove my drawings for a second, spinning top, a little bit of a spinning top there, big wick to the upside and downside, small bodied candle. We did close above the high from Thursday on the 5th. So that high was 599. We did close above that, so I do think that's good. But if we do look, we do have higher highs in the ETF price, whereas with the RSI, we do see lower highs, so that's bearish divergence. But the RSI could be going higher to then meet up with this level here, which is at 69.58, whereas it's currently at 65.07. It's just a little bit lower. If the price does go higher, that RSI will go with it, and then there will no longer be bearish divergence. So we will have to see. And then also, since I got all this stuff removed, let's look over at the weekly real quick. And just kind of thinking about this, we did close higher. Volume, it's actually a little bit lower. It looks like over the course of the past week, 341.58 million shares of this ETF traded, whereas it's 360.5 over here. This is 340, so a little bit lower volume, getting up higher. So maybe that is showing some weakness again. But the RSI here on the weekly is showing a higher high, corresponding with the higher high in the price. So there is no bearish divergence there on that weekly. But then, just looking at these levels and really just flipping over to the 10-minute time frame to see how this traded Friday after. I think this might have actually been jobs data. I'm not really sure. Some economic data came out. I forget what it was. And that's where we saw this candle, which I did not cover during the pre-market. So saw a big move up. Then it pulled back to my doodle. That's not a real line. It's just, my little arrow drawing. And it pulled back, tested some, that doodle as a support. I'm joking. And then going up higher and then holding after pulling back a little bit throughout the after hours, and then into the overnight, a little bit of a pullback. So it'll be very interesting to see what happens in the market. Seems like it's going to be a crazy week. Last week was a pretty crazy one as well. But yeah, we're going to have to wait and see. But then very interesting, the SPY over here closing below 600, kind of a very key important level. However, if we look over at the SPX, which is the S&P 500 index, closed above $6,000. So at $6,000.36, also being up 1.03%. They're the exact same, but the SPX closed above 6,000. So maybe that's a little bit of a signal that, hey, stock market's looking pretty good, but maybe as we see this bearish divergence down here as well with the SPX, we see higher highs here, lower highs in the RSI. Maybe that could be suggesting that we start to see a little bit of a pullback. Maybe we find like 5,940 as support, maybe down to like 30 or 20. Just seeing this consolidation here, that could be acting as some support. Maybe coming down to like 5,970 down to 5,000, let's say 900. And yeah, with that consolidation there, all this price action, that could be acting as some support. Maybe we do see a little bit of a pullback like I have doodled there. But anyways, from there, let's look over at Bitcoin and Ethereum. I do have them on the list over here, but I really haven't been looking at Bitcoin or Ethereum. I don't know, I had it on the 1 hour chart. I haven't really been looking at them too much over here in Webull. I've actually been doing that on TradingView. Crypto has actually helped me to get more familiar with TradingView. I really like it a lot. Just the different tools that are there for charting. And yeah, so I did go over this with Crypto Corner yesterday. Those are really not that popular. Next week, I am going to shrink the intro, since I basically talk about the same thing every week, and then just get into the different coins. So hopefully that's a little bit more accessible, a little bit more enjoyable, but it is helpful for me. So regardless of views, I'm going to keep doing it. And basically Bitcoin, what we see here is, it's a little bit of a pullback. So that was on the 5th, corresponding with the Trump and Elon feud. And then we did see a bounce from that. I think that was a really nice dip buying opportunity. I do have that purple level marked there at 102. Actually did have an order filled there. Nothing too crazy, but I did add a little bit extra at 102. And currently I have a limit dip buy for lower. But yeah, just normal daily stacking. I do believe that, let's see, I could probably just ask Grok real quick, so I might do that. What was the CME close for Bitcoin on Coinbase Friday, June 6th. So I'll just ask Grok. And so I asked before and he said Coinbase data. So let's see, Coinbase was 105.06. That's actually not what I believe. It's a 104.600. So that would mean a little bit of a pullback. I do have a green line marked here at 104. So maybe we see a little bit of a pullback. Maybe that's a last dip buying opportunity before we see some faces getting ripped off. And the reason why I say that is because the Bronx Viking was posting about this. This was on Saturday, that, Bitcoin explosive upside potential here after a strong bounce off the weekly 9-day extended moving exponential moving average / holding above falling resistance / failed breakdown of head and shoulders. WTF pattern loading. And so for Bitcoin, that actually stands for, what the fiat. And yeah, I actually commented twice on his post. And we just need to see that bearish Kramer tweet. And then this will be heading off to the moon. And so basically what you can see here is shoulder here, head here, shoulder here. But we actually saw a bounce from that support line, as well as what looks like this red line would be the 9-day exponential moving average. Saw a bounce, I remember it bouncing off of the 50-day moving average, so maybe that's what's here, and maybe the other chart that he has is bouncing off of the 9-day exponential moving average. Not really sure, but let's see, actually, what did he say here? After a strong bounce off the weekly 9-day moving average, falling resistance breakdown, controllers. Not really sure, but, it did, bounce up here, pulling back, bouncing again. Well, it did break out, I should say, pull back to retest. So it's just looking really good. So, I am excited about Bitcoin. That's also going to relate to Mara, but I'll get to that in a second. First, I want to go over Ethereum. This is one that I had a dip buy placed at 23.50, and I was contemplating placing a buy order at 2,400. And I have now added another dip buy. I'm not going to say the level because you got to watch Crypto Corner Sat Sacker to find out. But my order wasn't filled. It looks like the low was 2,384, so $34 above my limit buy. However, even if I had a limit buy at 2,400, I doubt it would have gotten filled just because of the spread, all of that. So no big deal, but I do think that this is a nice trend line for us to be keeping an eye on based on the lows from Sunday, May 18th, and then that low from Friday the 6th, bouncing up from there, now consolidating. I think we could be seeing a rip your face off rally heading up to 3,000 and staying above that line, potentially getting up to around 3,400. Pretty exciting to be thinking about that. But now I'm just going to talk about, let's see, Marathon Digital. I'll get into some of the options data here in a second. I'm just going to pull up the chart. What I've talked about previously with this one is, let's see, that, we saw this move up here and it was consolidating above that long-term, support. Goes back to the lows from December of 2022, also pivot point here at the lows of October 2023. Broke below it, but it looked like we're putting in this inverse head and shoulders pattern, consolidating above there. And now it's actually, it looks a little bit risky because it's broken below that trend line, now fighting to get back above it, having closed on Friday at $15.78, up 6.05% on the day. But it does look like it's continuing up about 1% higher in the overnight trading. Maybe we see it break above, but maybe we also see, a little bit of a pullback here. So, it's possible that this could be coming down to around 12. So good to be cautious of that. And let's see, but it still has not yet tested this 786, which is the Fibonacci retracement from the low of, let's see, May 6th, going up to the high from May 22nd. That 786 is at 1362. So we still have not yet tested that level. If we do break lower, we would be getting to the low from over there, which would also correspond with the 618 at 1265 from this Fibonacci retracement going back to the low from April 4th. So, it's quite possible we do see a pullback, but I think that Bitcoin's just looking really good, and I think that Mara will follow. So I'm not too worried about that. I do have a very small share position. I am more heavily loaded into a contract, and that's a call that expires in January. But then, related to that, this is just the net call and put premium from Friday. And what we can see actually in yellow is the stock price on Friday. So it did go up over the course of the day, upside here, and then just consolidation with a little bit of a sell-off towards the end of the day. What we did see is net put premium in red here going up, but not really that notably. And around this time, net put premium pulled back some and really just kind of decreased over the course of the day, ending at up an increase of $105,000. So it's really not that much. So not a number to get worried about, especially when we see the net call premium increase by over $4 million. So that is the green line here going up. So that does suggest people are, generally the market is betting $4 million on this going higher versus net put premium only betting $100,000 that it's going lower. And then if we do look over the past 30 days, we can see that, it's been up, it's been down, so nothing too crazy. Like the 4 million here, it's not as much as we saw over here, which was over 10 million, $10.75 million. And it looks like that was bought into this strength before consolidating over the course of a few weeks and then pulling back some. So those may not yet be in profit unless they took profit, the next couple of days. It doesn't really look like, because you don't see a lot of selling of calls, at least not $10 million. So I suspect those calls are still being held, or maybe that was on the 9th. So that was on a Friday. So maybe it had to do with contract expiration, maybe something like that. But then anyways, let's see. What's the next one on the list? Tesla. I'm curious about this because I feel like, with the stuff going on with Elon, we all know that he's crazy, okay? That's nothing new, and he's put a lot on his plate, and, Trump is a little bit volatile, a little bit stubborn, or, whatever, I don't know. And Elon's not a politician, and so he played the politician game a little bit, politics game, and it seems to have bitten him in the ass. Maybe he was, he definitely stepped out of line. So maybe Tesla could be pulling back some. We've already seen that, though, over 14% down on the 5th, and we did pull back to this 618. So I think that was a nice dip buying level. I was expecting it to come down to around $300. I believe that's where I have that alert there. Yes, as you can see, 300. And we're lower than that now, having closed on Friday, closing the week at $295.14, up 3.67% on the day, but actually pulling back in the overnight trading. It looks like it's around $293, down 0.6. It was 0.69, but now it's 0.64%. But yeah, I'm wondering if this is, like everybody's panicking, everybody's selling. I imagine Tim Walz is getting a boost out of what's happening with Tesla right now. So that makes me think that, hey, chill out, buy the fear, or just, hold on tight. But maybe it does go lower. So I think that is a possibility. I did pick up a couple shares, so very small, of TSLL, which is 2x leverage Tesla long. But I sold one just to, not be risking it over the weekend. And then I'm going to sell the other one at 10% profit, which is like $1 profit. Nothing crazy there, but I kind of just want to see what happens. But I do think that this could be setting up for a nice dip buying opportunity. Although I should note that this is the 618. It could also come down to the 786. That'd be around 250. But the thing I wanted to point out was actually a post from this guy, Nick Cruz Patane. I don't know how to say his name. But he pinned this tweet from this guy saying, sell Tesla, sell it all. Sounds like Tim Walz, maybe a Tim Walz 2.0. That's what I'm thinking. Robotaxi business will not be anything of meaningful financial performance for minimum 5 years. He doesn't know that, and they're going to be implementing it in Austin, I believe in June. That is the Robotaxi program, and then later cybercabs will be released. Robots are a 2030 plus story. I actually think that we could be seeing some Optimus robots out in the world maybe next year, and I think that would be on a small scale, though, and I think that the target a consumer for them, the target customer, would probably be like manufacturing. Personally, I work in a manufacturing plant, and I could see a lot of the work being done there by Optimus robots. And so I find that to be really intriguing. And also with, Optimus, let's say, you would have to maybe have a subscription service to that, just like full self-driving. And so that would also bring in revenue, but it would also be a lot cheaper than, paying for somebody to be at work. So I think that's great. Robotaxi would be, getting a percentage of that. And then Cybercab, that would just be, like an Uber that's all, manufactured and run via Tesla. So that's just a lot of money there. So I think that Tesla just looks good. Core business sucks. This guy's clearly an idiot. Valuation sky high. I mean, they're changing the world. They have changed the world already. This stock will be lower or around here for 3 to 5 years from now. Waste of capital. He pinned it, it makes me think it's maybe a bottoming signal, but maybe I'm wrong. I don't know. And then the other, let's see. Oh, I did want to go over the options data here is the net call and put premium. I'm going to do it really quick. Just want to point out, so we got the net call premium in green, net put premium in red. What we see is the net call premium down. Oh, sorry, net call premium down 1.3 million. So down a little bit, but it's not a huge amount. Lots of contracts traded with Tesla. But we do see that net put premium is down over $51 million. So that's, people may be betting that the bottom's in. Selling puts means that the bottom could be in or near very soon. But if we do go back just, 3 days, we can see, on Wednesday, we started to see some calls coming down. Looks like net call premium came down by 37 million. So people selling calls, not so good. Also buying puts, 21 million going into puts. And then following that, we did see the stock price in yellow tank on Thursday, down over 14%. Whoever was buying these puts made some money. We also saw people buying more puts on that day. It looks like about 45 million going into puts, whereas 166 million coming out of calls, the green line down here. So that's pretty massive, but I think a lot of that was probably panic, as you notice that all of these calls were being sold going along with the chart. And so that makes me think that whether it was stop losses or just panic in general. So I mean, this could be a bottom, especially we have gone up, flattened out a little bit, but maybe it continues down. I have no idea. And then one thing I did want to talk about with the next one, that is going to be GameStop. So, one thing that I've done, I still have one call contract that's going to expire in 2 weeks. It's probably going to be worthless. It's an $80 strike, so very likely to be worthless, but it's just, one last one. I sold the others at approximately break even. Just wanted to hold one to see what happens. But yeah, GameStop closed the week at below 30, which was max pain, closing on Friday at 29.58. And so I feel like if you look at the chart here, if I remove my doodles, downside move consolidation, that does look like it could potentially be a bear flag. But if we do look at it on the weekly, maybe we see, I believe that would be a morning star. And then if we do see a solid week going up, that would be a signal that, this could be continuing to the upside. So I think it looks really good in that sense, but maybe it does go down. We do have earnings coming up on Tuesday. And, like I was saying about those calls, I kind of got sidetracked from that. But I sold, basically all of my calls because I felt like I'd rather hold shares than a contract with GameStop. And so while it's not a big position, I now have 100 shares of GameStop. And the reason why I justified, getting that many, I had a smaller position before. I was just accumulating a little bit over time. But, on this pullback, I've gotten more. That probably means it's going to go down with earnings. But I just wanted to have 100 shares so I could sell covered calls. Very risky, I know. If this does squeeze up to, let's say, $80, I could be forced out of my position, but I'd be forced out of my position in profit. So I just wanted to basically pitch a case to you guys, and you can argue with me. I share your thoughts in the chat. I'll check it once this ends. Once I'm done going over the tickers. I just have plug after GameStop, and then I'll open up the chat. But yeah, I mean, you can dispute my thesis. But basically, my thesis is to sell, this is calls up here, to sell covered call with a strike of $36. The premium for that to sell, which is the bid price, is 48 cents. So that translates to $48. But I would just place a limit order at 50 cents. So I get $50 for that contract if it fills. If it doesn't fill, then I'd reevaluate. But so I could get $50, then I could buy one share with that. So then I'd have more than 100 shares, and then use the extra capital for, it's $20, nothing crazy, for, potentially other trades. And so with that being said, why did I pick 36 And yeah, so the reason why I picked 36 is because if we do look at the GameStop max pain, there wasn't really too much interesting with the net call and put premium. But if we look at the max pain, see where we have this big spike here. Actually, I don't know if I can, maybe I can zoom in on this so it's a little bit clearer. And I'll just scroll down so you can see it. So what we have, so where this gray line sticks out and then, the red dot's a little bit lower. So that was when the max pain was 29 and we closed at 35.01. So that was kind of like the climax for the stock. That was on, let's see, May 27th. So let's come back here to look at the chart on May 27th. So that would be over here when we hit a high on that day of 35.74, but closed at 35.01. And it looks like that was actually Thursday, not Friday. No, that would have been Wednesday. I believe, nope, that would have been, what day was that? That was Monday, apparently. And yeah, so let's see. So on that Monday, yeah, it's kind of crazy. So yeah, let's see. What was the max pain then for that week? Closing that week would have been on the 30th. Max pain was 30. So price came back down to that. And so I'm just, thinking about that, just kind of curious because this upcoming Friday, so June 13th, max pain is 29. That's right around where current price is. So I feel like in that sense, price is right around max pain. I don't expect it to go a lot higher. It looks like we are, closer to the $30 strike as we see that green check there versus the red X for the 29 strike. And so that makes me think that price may actually come down. However, with earnings, very tough to predict, really have no idea what's going to happen with it. But I think that, if over here, this max pain on May 27th was 29 and the close was 35, I feel like it's unlikely, given that max pain for this week is 29, for it to close above 36. So that's why I picked, that as the strike, $36, and also my average is just below 26. So I'd make $1,000 on this. If it did close in the money, I'd get my shares back, and then I could, put them back into GameStop, or, I could roll the contract if it is going to be closing in the money. So that's kind of my thesis with that. I don't know what you guys think about it, but then the last ticker is really just based on this post over here. So on, I believe Friday, I was at work looking at the chart for plug. And so the last time that plug closed above $1 was on April 28th, which was 28 business days ago. I measured it, and we can actually see it in the chart over here, meaning that if we don't see it close above $1 by Tuesday, Plug Power will likely be getting a non-compliance notice from NASDAQ, and puts could be a nice trade. Relatively high volume during the recent consolidation makes me think this is distribution and likely headed lower. So looking at the chart here, I just have this parallel channel downtrending over here. Do have increased volume. If I do remove myself for a second, we can see that volume's come down a little bit over here, but it's come down as it's attempting to go higher. We actually saw the most volume over here, as it was going up. Then this is actually effectively a rising three methods. So that does suggest a continuation to the upside, which we have seen, but we're getting into that downtrending level. And as you can see, this measurement is over the course of 28 days, going back to whatever date that was when we closed above, I believe, at 102, above $1. Had one candle opening, but then closing below $1, and then a wick above, close below, and then a close on Friday just below. And then just to give a breakdown, of the information that I'm looking at. So this is just the AI overview. Oops, not subscribe. There we go. This is just the AI overview. So the NASDAQ's $1 rule mandates that companies listed on the NASDAQ must maintain a closing bid price of at least $1 per share. If a company's bid price falls below $1 for 30 consecutive days, day number 29 is tomorrow, it triggers a deficiency notice in a period of time to regain compliance, which I believe would be 180 days, which is, I think, 6 months. A new rule proposed by NASDAQ in August and approved by the SEC further restricts the ability to use reverse stock splits to regain compliance and accelerates the delisting process. So that, makes me a little bit nervous. So I just kind of have this thesis that puts could be nice. I do have a put. It's a 50-cent strike that expires in December. I can pull it up over here. Just going to pull up the puts and then just going to be looking at the December expiration. Somebody was asking me about this on X, so I thought I'd just explain it a little bit over here. So, the 50-cent strike for this put coming down here, 50 cents. And so to buy one of those contracts is 12 cents per share. Each contract represents 100 shares, so it's $12. So I'm risking $12 on this going down. I think I actually have a limit sell order placed at either 14 or 15 cents. Nothing too crazy, but just kind of practicing a swing. I don't want to be holding this forever, and maybe I'm wrong. But if we do look at the chart, we've been getting rejected from below $1 a share. Just got 2 days left. So I think that, there could be some bearish news for Plug Power, and I think that it could kind of continue down the path like ChargePoint, getting a non-compliance notice, and I believe ChargePoint will also be needing to, have a reverse split to regain compliance. So Plug might be needing to do that 5-6 months from now. So yeah, I'm not necessarily bearish on it long term, but just kind of a short term play for, a couple of dollars swing. Like I said, nothing too crazy. But yeah, with that being said, I'm just going to open up the chat. And nothing too crazy there. So not by that I mean not too many comments. So that's nice, manageable. And so Saul is saying cheers. So cheers to you. And then Anon is saying, Ed, what tickers are you watching right now? So those are just like I've been finding that whether it's pre-market prep or overnight market prep, if I have too many tickers on the list, it gets to be way too long because I tend to go down rabbit holes with stuff. So Plug and ChargePoint are both two that I think could be going down over the course of the next weeks to month or so, short term. Long term, I have no idea, but I think both are probably going to need to have a reverse split, ChargePoint more so. But yeah, my thesis with ChargePoint is pretty similar with Plug. And then GameStop, yeah, I mean, that's when I just, I realize I don't want to be holding contracts with that, calls, because, yeah, maybe there's more capital raised. But with GameStop, interesting thing, Bitcoin just dipped. I wonder if GameStop purchased some more Bitcoin on that dip, and if Bitcoin starts to rip some faces off, rallying up to maybe 120, I think GameStop could be moving along with it. Same with Mara. Tesla, I'm kind of on the fence with. I'm not buying more aggressively down here, but I have been adding on the pullback. But yeah, so those are some that I've been thinking about. And hey, Ricardo, what's up? Good evening. Greetings to all. So good to see you guys there. If you guys do have requests, happy to go over them. And I'm just going to be sticking around for about 20 more minutes. And I should note, just I guess to give a shout out to these other YouTube channels. Part of the reason why I am not going to be doing a stream too late tonight is because I've got to finally, I don't want to go to the channel. I want to go to the channel and go to my subscription. Sorry. I have a motorcycle. I need to change the oil on it, and I've been procrastinating ordering an oil filter. So I need to look that up. I have my registration over here because I need to look that up. And also, I wanted to watch some videos. So Colin Gladman, I'm pretty much always talking about his channel, his tweets and stuff. And he just put up market setups I like for the upcoming week. And it looks like this video is about 24 minutes long, so it's really not too bad. Sometimes he does like an hour-long video, but I think he just has a really good perspective. He's, from what I understand, based on the way that he trades, he's really good at it, but he's very aggressive. So it's just nice to get his perspective on things, whether it's specific stocks or just kind of examining, trying to understand, the psychology of the trades. And then also Orlando, who's also on X, just posted this video on Unity Software. He's probably going to be going over the flow, but just on that thumbnail, you can see that Unity Software, it looks like it's in this massive, like, year-long consolidation, multi-year long. It looks like it goes back to 2021 over here. When I touch it, it moves, it changes. But yeah, loading. So Unity Software, I think that's just a really good long-term play. And I feel like Roaring Kitty is probably involved in that. I think that's one of his trades on top of GameStop. And then also this 3 coins, Kathy Wood. Spoiler, the coins are Bitcoin, Ethereum, and Solana. I have to say I'm pretty bullish on Ethereum. I really like it a lot. And Bitcoin, of course. Solana, I'm a little speculative. Or no, I have a small position, but I'm not going too crazy with it. And, on this list, this is that looks like Ethereum, but it's actually the Ethereum Classic, I believe. But yeah, I have Ethereum, Ethereum Classic, Bitcoin, Avalanche, and then Solana as well. And that would be Ripple, I believe, which is XRP. But yeah, let's, not talk about all these videos, but these are 2 that I will be watching. And I guess I can post the links to them in the chat. So this is Colin's video, if you guys are curious. I can't. It's not letting me copy it. It's not letting me paste for some reason. And yep. So I guess I won't be, but you can check out Colin Gladman or Colin_Gladman on X. And then I don't know what Orlando's handle is exactly, but Orlando on X, Flow Trading by Orlando is the YouTube channel. Both really, good traders, smart guys. They break down stuff a lot. So very useful. In all honesty, better than I can do. But yeah, I'm actually really curious what he has to say, because I think that he's bearish on some stuff. I think one of them is Oklo. That maybe I'll pull up that chart. Which let's see. It doesn't seem like the stream is going to be too crazy, so I'll just add stuff here. I was gonna do it to ticker request live, but I'll just add it to the pre-market or overnight market prep. And so I'm just going to add Oklo to the list here. So I did have a position in Oklo. I sold at around 49, I believe, maybe 48. I'm not sure. But it was a limit sell, got filled. I nearly sold at 56, and I'm talking about just one share. I had one remaining share from a small position I had over here. But yeah, I mean, basically, we just saw this big wick down, closing below over here, closing down here below 48. Actually, this is just a big, bearish engulfing candle, closed below that, closed below it again. Maybe, I got stopped out, sold near the bottom, and this, does how I've doodled. It rips faces off. But, for me, I'm just not really going to be paying attention to the chart too much. I do have an alert down here. Believe that's at $40. There's a gap that has yet to be filled at $39.72, so maybe that happens. But if it does pull back to around 40, that would also coincide with, 38 over here is the 50% retracement. So from that high, or I guess I should say from this low that was hit on April 7th at 1742, going up to the high from June 3rd, which was at a price of 58.69. I should have known that was the top, but yeah, I mean, let's just actually evaluate this a little bit. We do have a higher high coming in, lower high with the RSI. I mean, it would have been tough to say, to see, but we did see as this is pulling back. I don't know. I mean, to be honest, I think that this is probably going to bounce and go higher. I don't think it'll be coming down to 40. So that sucks. That if it does go up to 60, 70, whatever, I won't be holding. But, you know, it is what it is, and you can't be holding all of the stocks that go up. And so this might be one that I'm not holding anymore if it does go up. But if it comes down to 40, that's where I'd be interested to get in on it. But I should note that Oklo did close on Friday at $50.29, up 6.64% on the day. In the overnight, it's up about 0.32%, so nothing too crazy. But yeah, I mean, I'm very curious to see if this, does pull down to 38 to 40, somewhere around there. I'd be interested to start building a small position again in that range. And, then maybe to see some new all-time highs. The highest of all-time highs was within the past year, 59.14, hit on February 7th of this year. Pretty crazy. So, yeah, that's another one that I'm interested in. And, so just let me know if there's any others that you'd like me to go over. I can read, actually, I might read something. This is something I didn't find. I still have the book next to me because I didn't read over the weekend. I was bad. For some reason, I'm able to read if I work in the afternoons. I can read in the morning. Otherwise, I don't make time for it. But ChargePoint, this is one that, I've covered a lot, gotten a lot of requests for it. And, I'm just going to read a little bit from this book. And actually, I might pull up the ChargePoint chart on, TradingView. So just going to pull it up over here because I kind of identified this channel and I thought that this might be a spring, but actually I think it's a minor sign of weakness. And I think that this big green candle that we saw up here when ChargePoint hit a high on June 4th on earnings day, earnings were reported in the after hours. I think that was an up thrust, which is, basically getting rejected above, this level of resistance that I have drawn here based on the automatic rally, the AR over here. So it's basically these two bottoms are kind of like the selling climax before this goes up to then get rejected at that automatic rally high there, defining the top of this range. But anyways, and I might be wrong about what I'm talking about because I am still learning Wyckoff. But that up thrust there, the UT, the high on that date, June 4th, was 88.9 cents. And then we did gap down after earnings, and we're still trading below here in the 70s. So it's really just been consolidating here for a while. But what I wanted to talk about was this one thing that stood out to me because it basically just described what I had done. And another thing, this is an up thrust, if it is to be represented as distribution, that this will go lower. And so whether it's accumulation or distribution, I do think that the bottom of this range will be tested again, which is around 56, 57 cents, could be getting down to 50, which is down to here. Maybe that would be a spring. I don't know. But this up thrust, if this is to end up being accumulation, that would then be denoted as UA, which would be an upthrust action, whereas UT would be upthrust. And so I'll just read a little bit about that from this page because it effectively describes what I did. So I just find it pretty interesting. And so when we are looking at an accumulation or reaccumulation range, this event is labeled an upthrust action, while in the case of a distribution or redistribution structure, it is known simply as an upthrust. So basically by labeling this as an upthrust, or maybe that's just jargon, it doesn't really matter, but it's basically a rejection from that level and then to come back down. And so this is the only difference between these labels. If the signs we have up to now lead us to the conclusion that we are probably in an accumulation range, we will label it an upthrust action. If we think there is more probability that there's distribution taking place, we will label it as an upthrust. So that's why I label it as an upthrust. I think that there's more downside potential. And so when an upthrust action occurs and price remains above the resistance level for some time before falling, this upward movement can be labeled a minor sign of strength. So that would be, like, this could be a minor sign of strength, but really I saw a minor sign of weakness over here. So that was not a spring, it was a minor sign of weakness. Since it is a type of test that denotes greater strength, or in this case, greater weakness over here. And so this next part really just kind of described me. And this is on the secondary test at the lower extreme, which could also be interpreted at the higher extreme. Let me just read this. So this is a test at the lows of the structure that produces a lower minimum. It is generated due to the aggressiveness of the sellers and lack of interest on the part of buyers, which suggests that further tests to that area are likely in the future. So that means that we could be returning to this white line over here around 56 in the future. And this type of test denotes a lot of underlying weakness. Informed traders, maybe that's me, know that the price is overvalued and are anxious to sell. And so that was not me down here, but that was me up here around 70 when it was consolidating here. Let's see. Informed traders know that the price is overvalued and are anxious to sell. And so looking at the chart, I don't necessarily know that it's overvalued, but knowing that they got a non-compliance notice from the New York Stock Exchange and that they have to reclaim a price of $1 for 30 days prior to August 19th to regain that compliance, that means that basically by July 20th, because there are 31 days in July, and that might be business days. I think it's just calendar days, 30 calendar days. But if it's business days, then they need to get above $1 even sooner. And since they were rejected from below 90 cents over here, I feel like, I know that we don't want to hear it, but I think that a reverse split is inevitable at this point because they weren't able to get above $1. Maybe we do see, I still do have this green doodle up here. Maybe we do see further attempts to get above $1, like Plug Power is struggling to do that, but so far it looks like they're failing. They've got 2 days left to get above $1. And so I'll just continue with this paragraph that I'm on. So informed traders know that price is overvalued and are anxious to sell, hence this extreme weakness. This event is generally more likely to appear when the phase A secondary test has produced a lower minimum. So this would be like the phase A secondary test. So the secondary test would be right here in my view, but this actually looks like it's a lower low. There is extreme weakness in the market, and this zone will need to be tested in the future. So, this level was tested. It's probably going to be tested again. And so with that being said, I know I didn't sell at the exact top here, in all honesty. If I had read more of this and was more familiar with it, I just got to fix my bookmark. I probably would have waited for a little bit higher than 70, and 80 could have gotten filled because the high over here on March 7th was at 79.82 cents. So I could have waited for, let's say 78. Let's see, the open over here on May 29th, the open was 78.72. So yeah, I could have lost a little bit less, but I didn't. I was anxious to sell. So yeah, I think that ChargePoint's just a really interesting kind of like case study for me in learning Wyckoff seeing this consolidation and wondering, is it accumulative? Is it distributive? Accumulative, distributive? And yeah, so I'm just trying to learn that and get better at it. And I don't really know, but I mean, we are still above this, orange downtrend here. So maybe there is some hope with it, but really, I mean, I just think that there's going to be an announcement about a reverse split. And so let's just see, news here. This is from Motley Fool. They always have like clickbait stuff and you got to pay to read it. So I'm not going to click that. Where will ChargePoint stock be in 1 year? ChargePoint earnings, strategic moves, and challenges. Stock surges amid mixed ratings. Benzinga bulls and bears. Spotify, Applied Digital, DocuSign, and Tesla swings on Musk-Trump feud. I always say Trump first. I guess that, it really kind of transpired because of Musk. Also, this would be like alphabetical, M to T. I don't know. But I just think of Trump before Musk, I guess. ChargePoint, just above here. Weak quarter, disappointing outlook, sell rating downgrade from Seeking Alpha. So yeah, I don't know. I don't see any more requests. I got about 5 minutes left. So yeah, I don't know. Those are just kind of my general thoughts on some of the stocks I tend to go over. And so, yeah, if there aren't more requests before I get slammed with them at the end. Hey, Anthony, what's up? Where is GameStop overnight? I can definitely tell you what the price is right now. So they closed Friday at $29.58, but overnight trading around $29.80. So up about 0.74%. If I put it on the 10-minute time frame, we can see that this is the price action where it's shaded in black here from the market hours trading on Friday. Then this is the after hours on Friday. And now we're in the overnight. So price actually went up to, it looks like $30.01 in the first basically 10 minutes of overnight trading. Maybe there were some orders that were placed to be executed once the overnight trading opens, and so that might be why there was some volatility there. Maybe just some buys spiking it up a little bit, but then maybe there were some limit sells at 30 that then or right around there that just kind of dropped it back down. So consolidating just below around 29.80, 29.81. So yeah, that is where the current price is. Yeah, no problem. And I have to say that overnight trading prices, I take them with a huge grain of salt. I personally don't really put much weight on the pre-market or after hours trading just because it's lower volume. And you can see that here. Look at the volume on Friday. Lots of volume there. Nothing in the after hours or the overnight. And the thing that makes this be, I think it's good to be cautious about that is when you have all of this volume on a Friday, that's going to be big firms, Wall Street trading, whether it's hedge funds that we don't like or hedge funds that, are not nefarious, then they're going to be trading that. They're going to have the big money that moves. And really, that's what a lot of the Wyckoff analysis is about, is that when you're looking at the price action relative to volume, if there's not much volume behind a move, it's like, you can think about it like if there's a lot of price action but not much volume behind it, that means that retail's probably moving it. So like you and I are excited about a stock for whatever reason, so we're buying it, we're pushing the price up. But because there's not a lot of volume behind it, that means there's not a lot of money behind it. So if I was, whether good or bad, a Wall Street firm, big money, a whale, if I wanted to move the stock price, I could do that easily, because if it runs up to 30, I could push it back down very easily with very little money, because, on this one candle move, we did see a spike in volume there, but that volume for that 10 minutes is 4.27 thousand. And so I'm just going to pull up the calculator to see how much money, had to move that price up there. So let's see, the open for this candle was at, I'm going to do How do I want to do this? Let's see the low to the high. So the high was 30.01. And maybe I'm thinking about this too abstract, but 30.01, and then I'm going to subtract the low, which was 29.60. 29.60. So that's a difference in 41 cents from that low to that high. And that was, a volume of 4.27 thousand. So if I multiply this number by 4.27 thousand, that means that the amount of money behind that candle to move from that low to the high, and this is all just, kind of back of the envelope math, that's only around like the difference, that 41 cent difference from this low to that high. It's a 41 cent difference in price. And with that volume, assuming going from the low to the high, it only took less than $2,000 to move the stock price that high. So let's say if I wanted to suppress the stock to bring it back down, I'd only have to sell about $2,000 worth to push it back down. So this price action that we're seeing, it's really not that, there's not much behind it. So good to be cautious about that. So, I think that, I really have no idea with GameStop because of earnings. I don't know if they bought GameStop. I don't know. If you are, wanting a more bullish perspective, there is a video that I did post on the channel. So let's see, this should take me to the DGen Ed channel. So if you go to the DGen Ed channel and then go to the posts tab, you should be able to scroll down. This is Tom Lee. He gives a breakdown on the Trump and Elon feud. So funny. Just the way that he has all these gifts and all this stuff. So that's a great video. And then this one I posted, this is from Free Wyckoffs. I believe he used to go by Roaring Rico. So Rico, super friendly, he's a great teacher, and he really understands Wyckoff a lot, which he's kind of inspired me to get this book that I'm reading. And so he goes over GameStop in depth with this. I believe he maybe looks at AMC a tiny bit in it, but it's focused on GameStop. And so, I just said, looking at the chart, it could be a bear flag, and that is looking at the GameStop chart on the daily pullback consolidation. It looks like a bear flag. But if we do look at it on the weekly, maybe that's a morning star. And if we do get a green candle over the course of the next week and we end around $34, maybe even 33, it doesn't matter. If we're going up, that could be a really good sign. And that could be corresponding with earnings. Maybe that launches the stock price up and we really just take off. We do see higher lows being formed here on the weekly. So on the daily, well, that might look a little bit bearish. Downside with volume, followed by consolidation with decreased volume. It could be a bear flag. So good to be cautious of that. I feel like 29, 28. I don't think I had an order filled at 28, but I just placed like limit dip buys, or I was placing limit dip buys as it was coming down. And I got a number of fills at 30 and 29, but I had a limit dip buy at 28.69. And if I would have had a dip buy, an order placed at 28, there was a wick. If I just switch over the 1 hour, there was this crazy wick down here to 27.91. And so that could have been just, a pre-market, let's bring it down because we want to get more at a lower price and then pile in and then price goes higher. I don't know. But 27.91. It did test 28. Could be a bottom, especially if Bitcoin's about to take off, which is now on GameStop's balance sheet. Maybe they bought the recent dip corresponding with the Trump-Musk feud. It could be doing something like I have doodled here, and maybe it goes higher than 35, 36. Let's see, that is basically what, is talked about in this video, potentially getting into the triple digits, maybe with some time though. So good to take that with a grain of salt, but it is past the hour, and I said I was going to do a hard stop on the hour. So I'm just going to bring it back to the charts here, throw this up because, as always, those are just my thoughts. If you found them helpful, make sure you liked the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. And I will be doing another overnight market prep tomorrow evening. But for the rest of this evening, what I am going to be doing, I am going to order, let's see, I'm going to look up the oil filter for my motorcycle. Got to do it. And I'm also going to be watching Colin Gladman's video. And then if I have time, I will also be watching Orlando's video here. So make sure you check those videos out if you want some more analysis on Unity software. And then generally just, kind of market overview type of stuff with Colin Gladman. 2 channels, 2 traders, I think are great educators, and I really learn a lot from, so I'd encourage you to check them out. But yeah, that is it for me. I'll see you guys tomorrow for overnight market prep, which will be 10 p.m. Eastern, and I'll just be doing it for at most an hour. If there are some requests, happy to take them towards the end of that once I open up the chat. But yeah, hopefully you guys have a great start to your week. Hopefully you had a great